traders. I've got ourselves a little bit of a mixed open. You know, a lot of what we've been looking at on Friday has come back a little. So we're at nicer levels, but a little concerning about the weakness we're getting in some of the pairs that we do like to be playing at the moment. So in theory, you want to be buying dollar yen on dips, right? So we've got a dip here, and it's a question whether this is the dip you've been waiting for. Same with euro yen. Euro yen as well had a very good run, and if you're not in it, you have to be looking around here, sniffing around at the market at the moment to be seeing whether this support comes in. If it does come in, then you'll probably be looking at a pretty nice risk reward coming up here. Now, in terms of what's causing the drag down, I mean, look, it's just a little bit too fast, too quick, and couldn't follow through this morning, failed, and then obviously profit taking will come in when that happens. The Eurozone, there is a bit of risk this week. Like all things being considered, the ECB change in its tone really does magnify the difference between Japan and Europe going forward. And the US, you don't even need a reason to be buying dollar yen. Yields are so strong at the moment, but you're seeing a little bit of pulling back in these yields as well. So that's pretty much tracking exactly what you're seeing in the yen. Yeah, so yields pulling back a little bit. Couldn't really get past that 2.64 level on Friday, and while it's not while it's likely that they do remain buoyant, there's going to be two-way action during the days, right? Market's not too keen to be busting forward ahead of this FOMC, but FOMC, it's hard to see FOMC being too negative for dollar and dollar yen in general. So looking at opportunities here to get long on dollar yen or euro yen, if you like the euro recovery, makes sense. Now the main pair that's rallying today is actually the weakest last week, which is the pound. So pound is kicking higher. It had a reversal, mainly driven by euro pound selling actually, so profit taking on this pair. Now that's some pretty heavy selling coming through here. Let's see what happens down at 87.20. The dip buyers have been in control of this pair. Now, why is pound in play this week? Well, we do have the Article 50 being triggered, most likely on Wednesday or Thursday. There's the debate going on in Parliament, needs to be passed first. They've got to do an adjustment, then send it back to the House of Lords to get passed, and then once that happens, then May can give the speech. Really important what happens to the pound after she gives that speech. I'm in the camp, and I'm looking for some strength in the pound after that speech. If that happens, I think that could lead on to a bit more of an extended counter trend rally, and that would also allow the euro yen, pound yen to be part of the game as well. US dollar might just be sideways action against those two, or just falling back a bit against the pound, against the euro, but still holding a strength against dollar yen, making the euro yen and pound yen hold up. So stocks aren't really giving lead either. Stocks were a little mixed on Friday, up and down around the NFP, so that's doesn't really help us in terms of setting direction. But the general feel is, that this will be buying the dip here on the dollar yen. Same with stocks, right? You want to be buying the dip, just testing the new trend, which is long euro yen. So yeah, it's going to be interesting this week. I mean, so much going on. You got the Dutch elections, right? You've got the I might even raise that up a bit. You've got the Dutch elections, you've got Article 50, you've got the FOMC. All those alone can cause, massive volatility. I think the euro will be waiting for that Dutch election, similar to how, the hand was given away on the euro when it rallied on Friday so strongly. I think after the NFP here, that there is a lot more room to move. And the Dutch elections, while there's a bit of fighting going on between Turkey and the Netherlands at the moment, I mean, that's just noise, right? That's just politicians being strong in the final week of election. Because the anti-immigration party is the one which is set to pick up so much in Netherlands. So that's probably why you're seeing the incumbent government being so, the rhetoric ramped up so much. So yeah, it's pretty interesting action though. I mean, it's like I like to get these pullbacks. I like to get this these nice levels. It's just, you know, every time you do have to pull the trigger, you're hoping that it does stabilize. I might even actually wait here for a little bit of strength to come through on the dollar yen and on the euro yen, or the euro itself, before pulling the trigger here. There's no rush. It might actually pull back another 50, 100 points combined here. So euro yen, I mean. So another. I mean, look, I can't see the dollar yen going too much lower, and or the euro going too much lower. So we're close. We're close. Stops in general, I'll be putting my stop around about 121.50. Was the level I was looking at before. Now the target on the top side is 125. Alright, so we want to break this resistance from previous, and 125, not too hard to get to. Just sort of like the previous sort of levels, but you know, really we got 500 to 1,000 pips in the coming months on this particular trade if it works out as I envisage. We've been struggling for a little bit to find a potential new trend. I think that this is one. Pound yen as well. Obviously, we need to see the pound be stable first, right? And the reaction to Article 50 being triggered. We don't want to preempt that, the tone and how she delivers it, and you know, if she comes out swinging, then yeah, maybe the bears will take control again. Last time she gave a big speech, though, the market did rally the largest in a couple of years, something like 500 points. Aussie dollar has also led a rebound here. So Aussie dollar, you're right, it held at 75. And dip buyers came in, and actually, I mean, that's a very strong rebound here in Asia, all the way back up to 75.90. I mean, it's not my favorite way to play US dollar strength, that's for sure. And the pair which is interesting, I think, looking at the market at the moment, is the Kiwi dollar. Kiwi dollar's underperformed a fair bit here compared to the Aussie, because the Aussie Kiwi has been rallying. So let's see. I mean, it's if it begins its grind, and when it starts to grind, it's really hard to stop the Kiwi dollar. You know, you want this sort of price action on the Kiwi. It seems to have held so far anyway. So you know, there could be an interesting one to be watching here. I like it. Aussie dollar and the Kiwi fall sharply, then grind higher for weeks. That's the status. If it can get past the FOMC without too much bullishness or hawkishness from Yellen, and I mean that's something we'll talk about on Wednesday. You know, how she's going to come across is pretty important, because if her intention is to let the market know they're raising 2 more times after this time, then she has to come across a little bit hawkish, yeah. And the market still is not priced in fully 2 more rate hikes this year. After this rate hike, so 3 rate hikes for the year, and so there is some room for the US dollar to move if she signals that. So there is some definite risk here to the recovery trades from that. But I think if you're going the angle of pound yen or euro yen or dollar yen, you're going to be a lot, you know, much more secure than against outright looking for US dollar weakness. You buy the rumor, sell the facts sort of scenario. And if the market's a lot higher, it becomes a lot more dangerous. So say the Aussie's at 76.30, it's a lot more dangerous. If the Euro's at 108, it's a lot more dangerous. If the pound's already at 124 or something, you know, starting a recovery, and then we go into the FOMC, and then Yellen comes back over the top, you can see the market resume that downtrend pretty quickly, pretty aggressively too, from a higher level. When it's a bit more mixed, it's a bit more up in the air, right? You have to really pass what she says, then watch those US yields. But that's something we'll talk about on Thursday a bit more. Today we're just looking at the recovery, the just reaction from the NFP. The pullbacks here, I still believe are just profit taking, and so we should use them as opportunities to get in. Let's have a little look though in terms of some of the banking reports this week, over the weekend. Fairly varied topics. This is always a good one to be watching. Goldman Sachs charts that matter. So it could be on anything actually. I haven't looked at this one yet. You like it, Potter? You like the old buy? Yeah, I do too, mate. I just don't want to signal that. I've got enough euro pound shorts going on to not be talking and to not be adding more danger, which is a Kiwi trade is always dangerous, right? Next up, we'll watch 107.60. Looking for range trading in dollar yen. I mean, that's a decent pullback they're looking for there. You can't go too far. You can't go too wrong though buying dips. I mean, unless stock markets crash on after the FOMC, and you know. In what scenario does the stock market crash, right? The stock market crash, if she comes across hawkish and the market has to price out, you know, more rate hikes, right? A lot quicker. And it's a bit of a shock to the system. Alright, now in that scenario, stocks might crash. If she comes out and she's gentle, softly, stocks will be supported on that, especially if she's upbeat about the economy. But so if it crashes, right, because she's aggressive, then dollar yen goes up. So, you know, that usual dynamic between stocks falling and dollar yen will break down in that particular circumstance. If she's soft and, you know, euro and Dow starts to rally, you know, dollar yen can't fall too much on US dollar weakness when stocks are really supported, because you'll get that support from Aussie yen, pound yen, and euro yen, just as the safe haven sold. So it's you know, if we're talking pathway analysis, which is what we just did then, it's hard to see a situation where the dollar yen falls aggressively here. I mean, obviously, apart from them not raising rates, right? Euro pound, 88.55. Yeah, I'm a bit worried about euro pound. Bit worried. They really, I mean, I like the euro. I've turned into a little bit of slightly bullish on the euro in general. From what I've read, it looks like there's a 0 chance that Le Pen wins. So a lot of the negativity and the concern in the Eurozone might pass pretty quickly, and therefore you've got just the ECB tapering at the end of the year, which is hawkish and, you know, one-way street, right? And the change from neutral to hawkish from the ECB is, well, less dovish is still more hawkish, is an important event in the market in terms of bottoming out in the euro. Remember, when the US is raising rates, right, in most cycles when the US is raising rates, the US dollar does not do well. It's in the lead up to the US raising rates that the US dollar does well. So that fall from the fall from you know, the ECB starting its QE and the US normalizing policy is why the market's here. Yeah, we're talking about the 2 years out. So 2 years out is what's important. When the 2 year out starts to change for Europe, then this starts to rally. It's not, you don't have to wait for the market to actually, for the Fed to raise rates 3 times. That's priced in. The ECB going towards raising rates the first time is worth, you know, a 2,000 point move. You know, I hope that makes sense. It's the timing of these changes in the outlooks. The Fed raising rates is not going to cause this to go down. You know, the Fed raising more than we expected, and the ECB delaying further than expected currently will push it down. ECB coming out and the Fed delaying, that's a huge rally. That's 130 stuff. So we're talking, you know, if you're talking about why the market moves, it front runs by 6 months to a year some of these changes. So you don't want to be looking day to day at some of these things, saying, well, there's still a divergence in policy between the ECB and the FOMC. That's accounted for, right? That's accounted for, and if that divergence is getting smaller, or it looks like it's inevitable that the ECB tapers, then that's actually a very hawkish change in tone, and the market picks up on that. You can see significant new trends in the market. So this is the all-important 10-year. If we do reach 2.74, you're talking dollar yen at 118, 120. So it is important to be watching this chart on Wednesday night. Yeah, no, but I mean, do you want to be short or get out early, Porter? You want to be short into Article 15 being triggered after last time May spoke? I mean, there's two ways to look at it, right? You got the people who are short; they got to get out too. I mean, they'd be a little bit worried if they're sensible. Anyone who says I know exactly what the pound's going to do in the next 2 weeks is a bit of a crazy man, right? So this is the Eurozone 10 years. They're starting to rally sharply, right? That move, while it's tiny compared to the big move in the US yields, that's a very subtle and hawkish change, right? If we break higher, all of a sudden we've got ourselves a whole new game. French yields are going as well, Italian yields, ooh, everything. Yeah, so they're trying to interpret here. I'm not an Elliott wave trader. Definitely starting to look a little bit more bullish though, doesn't it? I mean, a move to 110 is nothing. It's nothing. You're a Kiwi. I didn't look at that last week either. That's got its move. And you're a Swiss. What about you're a yen? Have they got that? Yeah, oil. So oil's if it stabilizes and it gets a bit of a bid back in, that's going to help stocks, I think, resume its rally as well. I mean, if it falls further, then the inflation that has been creeping back in around the world and has led to a bit of confidence, that will disappear too. And so really, I mean, it's important oil just for secondary effects, not so much it's really it's big direction. Alright, so these guys are looking actually for a bit of a deeper pullback in the Aussie dollar. And remember that the Aussie dollar today, this report was written before the Aussie dollar rally, has had a nice recovery. So I don't know if we're going to get that push below 75, perhaps on a hawkish fade you might. But there is a lot of interest to be buying Aussie on the dips. Yeah, buying euro against something makes sense, doesn't it, Potter? It does. I like euro yen, but just quickly so we don't miss anything, because we focus on those big events, but there could be a couple of small events that we don't want to miss out on. Oh, big Bank of England. Jesus. Alright, let's not forget about them. New Zealand GDP is not bad. Aussie employment, that's tier 1. Short-term effect though, usually. Yes, yeah, so it's a little bit later in the week for the Antipodeans, as we call them. Euro yen. Where are we going? Yeah, I've got something here on Bitcoin, not going to read that. Something I read earlier I thought that was pretty interesting, guys, is there's a G20 meeting coming up this week. This weekend, and it's Treasury, right? So you're gonna get the new U.S. Treasury speaker, and he's supposed to be talking about currency devaluation. That could be a very critical speech. That's very important to see their tone towards China and how they go after. You know, this is actually, don't underestimate this. We could come in on Monday and have some huge moves, as you know, U.S. Treasury says this, you know, in terms of the communique, but yeah, that's going to be interesting. You know, that's his first speech, right? We'll see how he comes out swinging or not. I'm guessing he's got something to say. I don't think Trump's just said go and be meek, right? I think he's going to say, Trump's probably told him to let the world, put the world on notice. So that's something to worry about later in the week, but definitely not inconsequential. You can get some big moves there. Alright, there's a few little reports here about the FOMC. I'm probably going to leave them for Wednesday, guys. This is nothing really too exciting to be talking about just now. It is a bit interesting that the pound's had a little lift here. There hasn't been much news over the weekend. Keep an eye on it though. If it starts to get even stronger, that's another key little sign here that, you know, not all is negative out there for the UK at these levels anyway. Keep an eye on this dollar yen, see if it finds support, and the euro yen as well. If you get a little bit of support come through, I think you can buy if you're not in already. It's makes sense to me anyway. Yeah, I didn't know there was a Trump-Merkel meeting. When is that happening? Was that? Okay, that's tomorrow. That could be interesting. Yeah. Also, if any comments come out about the euro. Yeah, no. Alright. Alright, guys. Look, I'll be back tomorrow. We'll do some FOMC stuff tomorrow as well. But let's just see if these some of these moves on Monday are carried forward or not. Other than that, we'll be looking for some trade opportunities. We'll probably get a bit more clarification from May as well. So from the UK side, if we're going to get that Article 50 being triggered, that's another key event. So just the timing of it, we still don't know, and that's really where you want to be focused on later this week. All right, guys, trade safe, yeah. There's a fair bit going on.